Some things really don't add up with this whole Bitcoin ETF story. On the one side, we've got BlackRock that rarely gets any ETF applications rejected. Only 1 out of 500 applications had been rejected. But on the other side, we've got the SEC that's pushing against this heavily. After reviewing the application, the SEC has asked BlackRock, Fidelity, etc. to name who their surveillance partner is. So in order to avoid market manipulation, wash trading, etc., there is data exchange happening between different markets. And the SEC wants to know who is that partner that actually provides that trading data. And here's the big issue. After that request, Coinbase had been named as that partner. And as we all know, the SEC is suing Coinbase for operating an unregistered securities exchange, broker, and clearing agency. So this lawsuit is not just about offering a DeFi yield product, it's actually about the core business that Coinbase is in. And so the SEC has a real reason to reject this application potentially. It's important to see that there is a difference between the BlackRock application and the other asset managers application. BlackRock is filing their ETF with the Nasdaq. Fidelity, WisdomTree, VanEck, ARK Invest, they are filing with the CBOE, the Chicago Board Option Exchange. Now we can have a look at the CBOE filings. We can download them over here. And we've got a separate filing for the Fidelity ETF, the WisdomTree ETF, VanEck over here, and Invesco. And each of those filings is roughly 200 pages, and you can load them in a tool called Chat PDF. So you upload the PDF and then you can chat with that PDF. And so we can go beyond just the headlines. We can go to the source. And there's no such term as a surveillance partner, but there is the Surveillance Sharing Agreement, which is organized by the Intermarket Surveillance Group, the ISG. So that's over here. And Coinbase is not part of that ISG so far. Only the CBOE is, and of course the Nasdaq. And in here we can find the reference for Coinbase on page number 186, Surveillance Sharing Agreement. The exchange is proposing to take additional steps to those described above to supplement its ability to obtain information that would be helpful in detecting, investigating, and deterring fraud and market manipulation in the commodity-based trust shares. The exchange is expecting to enter into a surveillance sharing agreement with Coinbase, an operator of a United States-based spot trading platform for Bitcoin that represents a substantial portion of US-based and USD-denominated Bitcoin trading. The spot Bitcoin surveillance sharing agreement is expected to have the hallmarks of a surveillance sharing agreement between two members of the ISG, which would give the exchange supplemental access to data regarding spot Bitcoin trades on Coinbase if the exchange determines it is necessary as a part of its surveillance program for the commodity-based trust shares in a manner similar to the way that exchanges share information as part of ISG. If the exchange, so CBOE, and Coinbase enter into such an agreement, the exchange would incorporate the spot BTC surveillance sharing agreement into its market surveillance program. And it would do so prior to allowing trading for the shares. This spot BTC SSA, in combination with the information available through ISG related to the CME Bitcoin futures, which the exchange believes on its own represents a regulated market of significant size, would further strengthen the exchange's ability to detect and deter manipulation of the shares. So basically, the CBOE arguments over here that not only the data from the Coinbase Bitcoin spot trading should help detect market manipulation, but also the data that's already existing by the already approved Bitcoin futures ETFs on the CME. Now, I couldn't find the document for the application by BlackRock that's done with the Nasdaq to the SEC. So it's very much a possible scenario that the spot Bitcoin ETF by BlackRock does get approved, while the ETFs made by Fidelity and WisdomTree, VanEck and Invesco that are done via the CBOE might get rejected. And again, that's due to the SEC suing Coinbase. If, according to Gary Gensler, Coinbase is not running a legal exchange, then why would the data from that exchange be sufficient to prevent potentially shady market manipulative behavior? That's a potential line of argument that could play out here. So things are very far from certain. The market so far seems not to be too afraid. There had been an initial drop of roughly 3% when the SEC asked for further clarification, but a lot of that loss has already been recouped. The market thinks that the pressure on Gary Gensler on the SEC will be strong enough and that the Bitcoin spot ETF will in the end get approved. I tend to agree with this, but I also think that it might take longer than most people expect. So we should all be prepared for further pain and have long enough of a time horizon to actually wait all of those potential dips out. And if we don't yet have enough allocation to crypto, or especially Bitcoin, we might even consider buying those dips, right? Over the long term, more and more Bitcoin moves into the hands that don't sell the dips. The liquid Bitcoin supply continues to shrink. Thus, every month when people dollar cost average in, the price rather tends to creep up. So let's be diversified across different assets, but let's also not be too fixated on that spot ETF. We don't necessarily need it. We will see an outperformance of Bitcoin versus other assets over the long term, especially versus fiat, simply because it inflates less than fiat. Fiat currencies get printed way faster than Bitcoin gets mined. Thus, over long enough of a time horizon, if Bitcoin doesn't get completely outlawed, which is unlikely, over the years and decades, it will appreciate. That's an opinion I hold very strongly.